Hey everybody, it's Kemosabe here, giving you an update before the weekly close, looking for where the opportunities are in the upcoming trading week. So I have marked off from previous video this 50% of this wick, which is an area of interest for me because there is liquidity right there. So pay attention to that area 56,400. That is an area of interest. Let's have some fun with some trend lines. We draw this trend line that gave you the breakout. Let's draw another trend line from the lows at 48K, 48, 49K up to this previous wick. And we had that triangle that we were contemplating in the last video that broke to the upside. Has not invalidated a triangular shape just yet until you break above this area on a closing basis, 64,342. So get a daily closure above that. That invalidates, chopping sideways and further downside. Now let's draw the trend line from all-time high to our current supply zone. That's where supply ends up coming in repeatedly. So we'll color that one red. And below here, we will color that one, say, yellow. Those are important trend lines for me. And we'll label that supply line, and we'll label the demand line. So we'll see if they hold as supply and demand. Also want to try to do some cycles, like cyclic lines. We've been having our lows towards the beginning of every month. Seems to be some relevance there. And if we take the cyclic lines and line them up with our two previous lows, that would give another cycle low potentially on October 8th. Given that information, I will take this previous supply line and move it down to where it actually did break out. And we'll look at the confluence there. They all appear to line up all right in the same area for a next cycle low. Right at your demand line and a back test of this previous supply line coming down. It all goes October 8th at 56,428. We'll see if that plays. We don't know, but if price does get down there, I see opportunity right there. On the daily, we could see current price action. It's kind of moving up in an ABC, pop down. Maybe we do another ABC to get up to this supply line, grabbing this liquidity right here before moving down into our next cycle low. So that's where I would see major opportunity. If this current leg up is to match this current leg up, we may be in this choppy area for a while and then just break up out of that cycle low. Be more like a timing based cycle low. But yeah, this is the area that I'm currently interested in. Not necessarily interested in selling, though there is a valid sell setup at our supply line with a stop loss at that previous high. Many could be waiting for a higher high close to buy the higher low that comes in there. That also works with the empty space theory. So you have a higher high, you try to buy the higher low. This is where the higher low is likely to come in. It just has a lot of confluence. I really like that. If you look on higher time frames, such as the 5-day chart, for example, the 5-day chart has already closed a higher high. So we would look for the higher low on a 5-day chart, as long as the 5-day does not continue to close lower lows, because then you'd be entering a sell setup. Now zooming into a 4-hour chart to see where this could possibly be landing from the demand line. Potential A, this could be B. You could be working on a C leg that takes you up into the 23rd, 24th. So the next 2 days maybe get you up to that red supply line that we were looking at before. And we'll take a trend-based fib extension measurement of the A wave and project from the bottom of a B. And that gets you into that pocket of 66,000 to 68,000 area. And that comes right to the supply line. So that would be an area to take some profits if you are long from lower. Maybe take off 25%, see if you get that pullback into the next cycle low. Or you can just let it ride and put your stop loss. I would say measurement of this leg down would be my stop loss from anywhere on the chart. So from current area, if I was to measure that leg, put it to current high, my stop loss would be 58,739 at the 1618 of the measurement of that leg. As soon as that happens, this buy setup is invalidated, which would look like something like this, being the buy setup right there. Invalidation would be the 1618. So I wouldn't want to see it going below there if we are to attack that supply line. Currently on the really low time frames, currently looking at that, matching that, and matching our current area to what this looks like. That kind of is what I'm kind of looking at, and then maybe a pop out of here after retracing a little bit, grabbing that liquidity lower, pop higher into that supply line, which would look like some kind of ABC, making it all look very corrective. And that's just to get the liquidity from the Elliott wave traders to make sure that it's not a distinct 5-wave move up here, the 3 waves back, to give you the ultimate Elliott wave buy setup. That tends to not happen. For the past few years, Bitcoin has not been acting like that. So I do like the fact that this is coming up in what looks like a 3-wave. And eventually, the market's not going to care. It's just going to break higher if the supply line or the demand line holds at around 56,400 at this liquidity. So taking previous price action into account, this could very much look like some kind of A, B, C. The timing and whatnot that I'm seeing kind of suggests that we're going to break up from this area or hold above the supply line before taking off. But I really like this looking like an ABC, coming back down, confirming it as an ABC, so that if this does break up, you'll have short sellers around there. It'll give you a little sell setup, and it'll rip higher again, and just using that as liquidity or fuel to rip upward. So if the buy setup does come at, the first part of October at the 56K area, stop loss has to be before at the previous cycle low, and you could wick below that, making this an ABC and then go up. Totally fine. But what I'd like to see is an uptrend starting on closing basis. So if you start getting higher highs, higher lows, you try to buy the higher low, you get stopped out, then it's going for this liquidity, get a reaction, there's your stop loss. If it takes that out, it's going for the 49 and probably down to 43, 44, and that would probably break the cycle, and it would look more like 2019 than 2021 or 2017, the way you see a lot of people talking about. As far as the supply line goes, look where supply came in before. Look at how symmetrical the timing is between that. Not necessarily that you would measure your cycles from high to high, but it seems that cyclically the supply tends to come in around the same time, or has been, until we get a change in behavior of that. If we don't have any supply really coming in, then you would see price action break above the supply line, hold that as support before resumption higher. But for now, my expectation is supply line, some type of close a higher high, either daily or maybe even a weekly, and try to buy the subsequent higher low. Get a higher high, buy the higher low, and then you can get going. So that's what I'm seeing in the market in the coming days, all the way until October, as a potential nice buy setup if we get it. If we don't get it, then we'd have to entertain entering long setups higher So hope that was helpful. Like, subscribe, comment, ask questions. This is all for educational purposes, just trying to help you guys out. Have a good night. Keep your stops tight.